Baird is out with some positive commentary on Tesla, calling it a best pick of the year.
Ben from Baird is a pretty decent analyst, but he's a much better Tesla stock analyst. He always said buy or hold, and assuming that you just kept buying this whole time and never sold anything, ooh, you're looking at massive returns now. On the other hand, if you listen to Morgan Stanley's Adam Jonas, yeah, oh, you would have sold at the very worst time. So Ben certainly has some good credibility when it comes to Tesla stock specifically.
Is holding firm that it's a top pick for the year. The analyst made no change to his outperform rating, and this of course comes ahead of its production and delivery figures, which are due out this weekend. He does tell investors in a research note that he's cautious heading into those numbers because sentiment for the quarter is pretty negative, but he thinks the results will be a de-risking event. Also sees it as a low point for gross margins. Of course, gross margin is going to be a key figure, the outlook for that.
We saw Tesla starting to advertise in a more serious way, and assuming that this continues and that Tesla launches a few video ad campaigns, then that means that indeed the margins are probably going to stabilize and perhaps even increase, because the backlog is likely going to come back if we do have a successful ad campaign, which would also mean that Tesla would probably increase prices actually, because every time so far this year when there was a bit of a backlog, boom, there was a price increase, or if you saw the inventory go down significantly, we would see immediately pretty much a price increase. So yeah, I think Ben from Baird does have a point that this could be the bottom for Tesla's margins.
So Baird has a $252 price target on Tesla, which implies about $10 upside from where it's currently trading. Meanwhile, we also heard from Piper Sandler on Tesla this morning.
Alexander Potter is an even better Wall Street analyst, and he's an even better Tesla stock analyst. Look at his average return per rating. It is sitting at over 116%. That's crazy. Unless you are a retail Tesla stock investor with most of your portfolio in Tesla stock, then that number does not seem all that high. And here are the latest thoughts from Piper Sandler on Tesla stock.
Analyst there is expressing some caution heading into these delivery numbers and actually looking later out into the year, saying regardless of the outcome this weekend, we wouldn't be surprised to see profit taking in the coming months. Keep in mind, Tesla up almost 100% this year. Also warned about some operational hiccups. That said, he stuck with his outperform rating and $280 price target. So
and with the best
still
pick
bullish
label too.
Yeah, and
with like kind of some major caveats to it though.
True, but obviously
taking risk, other
well,
hurdles.
it's up 100%. Who wouldn't be taking profits at some point when you're really looking at those kind of gains?
Well, me, I'm not taking my gains yet. I'm just buying more every single month.
But sticking with the outperform rating, did also note that his estimate for delivery numbers for Q2, 469,000, actually may be a tad high. The FactSet consensus is for around 445,000. So maybe just setting the stage for some potential disappointment. Going to also be focused on the gross margin outlook, saying prices have been stable, but price cuts in Q3, if any, could reignite concerns about margins.
469,000 deliveries projected by Alexander Potter from Piper Sandler. I definitely see what he did there. I don't really think we will get to that number. That would be really bullish if we can get to that. Troy is only projecting 441,000 deliveries for this quarter, which is quite a bit lower than 469,000. Troy would have to miss his estimate by more than 5%, and only once did he miss by 5%, and that was because he was too positive, not because he was too negative. Lately, actually, every time he has been too positive, although last time he was only too positive by 1%, which is a small error to make. That was a really good prediction there. We have some positive news here. Lex Fridman trained with Mark Zuckerberg, and now he's training with Elon Musk, which is good. And the really good part here is that Lex says, I think the world is served far better if they train martial arts but not fight in the cage. I 100% agree with that. Hopefully with a little bit of influence from Lex and Elon's mom, Elon maybe will change his mind. Here's the CEO of GM explaining how she made the deal with Elon Musk to access Tesla's superchargers.
Can you take us behind the scenes? Does Elon Musk call you up on the phone and say, hey, Mary, you want to do this?
We actually text each other.
You have a texting relationship?
Yeah,
not Signal, it's text, straight?
I mean, we've met before on a handful of occasions, and we text each other.
No DMing on Twitter now?
So I texted him.
I would love to see these messages. This is good news for Tesla. S&P Global Mobility's loyalty ranking is out, and Tesla again topped the loyalty ranking for luxury brands at 68%, and BMW was second but quite behind Tesla. There was no other luxury brand above 50%. In other words, Tesla is the only one that is keeping more customers than it is losing.
Greg, what do you think this means, or does it mean anything just in terms of EV adoption? The fact that if you have a name like Lordstown, some of the other smaller players within this space struggling to survive, is it going to have any impact, do you think, on getting more EVs on the road?
In this case, I don't think you want to read too much into it. I think Lordstown was a fairly niche company. They had they were like a work truck company, if you will. So I think, are they a sign for what other, startups could happen to them? Potentially. But at the end of the day, Ford, General Motors, Tesla, Toyota, you name it, they're investing heavily in electric vehicles. And consumers are going to have a lot of choices out there. They're going to have a lot of different options, a lot of different dealerships. So they're going to have options. If you're a consumer, you're probably actually not thinking of a startup because many of them are actually expensive or sort of narrow use cases. I think the mainstream automakers and Tesla will have far more options going forward.
Yeah, a small EV startup like Lordstown Motors is not going to hurt the EV adoption rate at all. And this is from autonews.com, and this is, I want to emphasize, a real quote from autonews.com. Toyota tackles Tesla trauma with radical EV production overhaul. Toyota is modernizing its famed production system to take on Tesla in the EV era with a slew of new manufacturing tech that will debut in just a few short years, which is going to be a few years too late. I checked a few days ago, and interestingly, Gary Black has an active short position on Toyota, meaning he's betting on the stock to go down. I think there's a good chance he will end up being right.
There's a new study out that points to just where the adoption is happening. Some interesting numbers, though, here from iSeeCars.com, pointing to Hawaii, Oregon, Vermont, Washington, and California seeing the lowest growth in EV growth, we should say. So California, take that as an example, because we have seen massive adoption there. We're still talking just over 15%. Nationally, about 10% roughly, maybe a little under. I mean, is that kind of the tipping point? In other words, it's easy to get to maybe a 20%, but getting beyond that is an even bigger hurdle.
Yeah, I think that's fair to say. I think what we're looking at right now is the products are there. They exist. There's a lot of great EVs. I've driven many of them. Right now, the next part of the equation really is the infrastructure. How easy is it going to be to charge your EV? Where can you do it? What kind of plug will you be using? That's like the next great, unknown, if you will. And, you're seeing different companies are doing deals with Tesla now to get on the supercharger network and things like that make it easier for consumers. And that's really the next big part of the equation. It really is the network.
Yeah, I disagree with that. Getting to, let's say, 20% is the easy part, and getting over 20% is the difficult part. This chart shows what happens after you reach 5%. Now note that this includes hybrids as well, but if you look at Norway sales, for example, you'll see that plug-in hybrids here in orange, darker orange, they shrink later quite quickly towards the end, and they actually sort of help to transition away from gas-powered vehicles. And if you just look at some of the data that we have, once you hit 20%, yeah, there's no stopping. Things are generally going up after that. Like Iceland just went straight up after getting to 20%. Similar with Norway as well as Sweden. If you just look purely at the numbers and you ignore the number of vehicles that are sold, then if you, for example, have 0 EVs, and then the next year you have 1, and then the year after that you have 2, that was 100% year-over-year growth. And then the next year you have 4 EVs sold in the whole year. Now you also have 100% year-over-year growth. So you could say that year-over-year growth might be more impressive before you get to, let's say, 5% or maybe even up until 20%, but it does not slow the overall EV adoption, because now the actual number of EVs on the roads is going to be much, much bigger and actually significant.
Is it about the fast chargers, though? Is that necessary as opposed to the level 2 chargers we see a lot of, or does it need to be even more ubiquitous? Do we need to have something like wireless charging in order for drivers on the sidelines to feel comfortable switching over?
So, I mean, not to be a cop-out, but it's all of the above. I mean, it really has to be a situation where when you pull into like a charging station, it's accessible, it just works, and that it's quick.
And that has been already the case with Tesla superchargers. But if you had any other EV that is not a Tesla, especially in the US, yeah, sometimes it works, sometimes it doesn't, sometimes it's easy, and sometimes it's really difficult. And really, you only need one really bad experience for you not to want to have an EV.
You know, you really need to have whatever your EV may be. It has to be capable of fast charging, and most of the, the new ones are. And you need to be able to do that at whatever roadside, place you're going to. It's got to be basically like filling up your car with gas. And I think, are we going to get there in the next, 10 years? Maybe. I don't think it's going to necessarily be like a 2 or 3 year thing, just because there's so many challenges to getting above, like you said, that 10, 15, 20%. Like right now, there is enough infrastructure to service the people who are early adopters, who are really into electrics. But once you get beyond that, there's millions of people in this country, and you need to have a lot of options, and it all needs to work. And I think that's a really big challenge right now.
Look, other countries are already doing it, and it's working well, and it makes a lot more sense, generally speaking, for the absolute majority of people to own an EV instead of a gasoline-powered vehicle. Just a lot of them don't really know that yet, and we don't have a next-generation vehicle yet that is going to be way under $30,000. And while we do have a lot of superchargers around, if we had a whole lot more, that would be quite helpful, so that when you go to any destination, pretty much, you never need to take a significant detour just to charge your car, which right now you sometimes sort of need to do. For example, the closest supercharger is about 7 minutes away from where I live here in Vancouver, but the closest gas station is about probably 1.5 minutes away. It is definitely still a lot easier to find a gas station than a supercharger. But that will change with time. And YouTube wants you to watch this video next, but if you haven't finished watching this Elon Musk interview, you may want to watch this one first. My name is Matt Post. Just like and subscribe if you haven't yet, and I'll see you in the next video. Thank you so much for watching.